Morning, market chameleons, and soon to appear the king chameleon, Dimitri Pargamonic. Good to see you, Dima.
Good morning, Will. How are you?
Great. Awesome webinar yesterday on Interactive Broker Webinar Live, D. Great job.
Thank you. Yeah, that was fun.
Yeah, it's good
So
stuff.
our first webinar with Interactive Brokers. I think they invited us to do another webinar next month, I think June 8th. So still looking at potential topics to cover for the next webinar, but I'll probably have to decide by today. But a lot of people showed up, so that was very exciting. I'm happy that we're going to come back there and do another one.
Yeah, Jake actually watched it twice. He emailed me.
Oh, nice.
It was good to see. All right, let's start with the disclaimer.
Okay. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's a disclaimer.
Excellent. Excellent. What are you seeing this morning? Anything?
I think we'll start out, take a look at what's moving into pre-market hours. And then what we'll do is maybe take a look at some of our reports, implied volatility reports, and maybe straddles, because we started talking about yesterday. If we continue to see headline news with concerns on inflation, if that persists and it starts to, get into people's psyche, what we might see is volatility in the marketplace, right? You don't know which way the markets will go. Some of them, and I've been trying to find like which stocks could be potential winners, which stocks could be potential losers, and really it's not clear. There's so many different opinions, and the problem with inflation and instability is that until it's a problem, you don't know how each individual stock will be impacted, right? Because you could have inflation in input prices, you could have problems with salaries, or finding in the labor market will get tightened up. There could be issues even pushing prices in your products. So you don't know actually how it's going to impact every individual business. You could just kind of speculate, but until it happens, you don't know. And you don't know what they have underneath the hood, because any company out there could have something on the books, some kind of long-term contracts, some type of deals that could blow up in their face, right? So all these uncertainties are out there. And if we do see an acceleration of inflation, I believe that we're going to see also increased volatility, because that just creates uncertainty, what's going on within the companies, how it's going to be impacted. So
yeah, it's hard to plan in that environment.
It's very hard. It's very difficult to plan in that environment. It is, because once you have instability in the currency that you're dealing with, you may even think you're set up, you may think you're set up and protected against inflation, but until it hits, you really don't know, how things are going to pan out. And if people have ideas out there they're reading, if they could share it, that would be great, because I've been trying to read and find places where you can, besides cryptocurrency, where else you can.
Well, actually, Jake is on this morning, one of the longest running chameleons. And anyone who doesn't know, Jake set up a great Discord group where he discusses all sorts of investing related topics during the day. If anyone wants a link, they can email me. But he says, D, well, to avoid long duration bonds and narrative heavy tech plays, is his comment relative to the inflation.
So he's saying to avoid tech plays, or to
avoid heavy tech plays.
Yeah.
Obviously the tech has gone through a beating already, but long duration bonds, he's saying you got to avoid right now as well.
Yeah, you probably don't want to be in bonds with the inflation. And we're kind of already getting a signal that the Fed is saying we're at 2% inflation, right? They're telling us that we're at 2% or a little bit higher, and they're going to have a tolerance for that inflation. But if you're getting 0% interest in the bank every year, just according to what they're telling us, you're losing your purchasing power every year by holding your money in the bank. And even those long dated bonds, what are they like? They're below the rate, right? They're below 2% for sure. You're in there, Fed's telling you, you're kind of fighting the Fed, but they're telling you you're going to lose purchasing power year over year based on their numbers. So, that's not sustainable for a very long period of time. And I think what we have now is it's a very unique situation where the Fed is, we have inflation on the one hand, and we got an unemployment issue on the other, right? And part of that issue with unemployment is, COVID. So they're trying to get people back to work. And then part of it is people are not coming back to work because they're still getting benefits, unemployment benefits. So as long as they're getting it, and then unemployment benefits are similar to what they would get if they're going back to work, you're going to create this shortage of labor in the market.
I'm sure you've seen the pieces in the local news, and Philadelphia's got a great restaurant scene for people who don't know, but it doesn't matter where you are. People who own restaurants are dying right now. They cannot find people to, from the kitchen to the front of the house staff. I mean, they cannot find people to work.
And deliver, I mean, if you talk to, I guess maybe Amazon has it right. Amazon's pretty good with delivery, but if you start ordering, I don't know if you had this situation, but if you go to other websites and you start ordering things that need to be delivered, there are always like delays, or there are issues, and the delivery costs are going up. And I talked to some people who have smaller stores, and they're saying, look, we have an issue like with that there's not enough delivery available as there used to be. So
yeah, I just heard recently that Amazon's paying locally over $20 an hour in the warehouse for people in the warehouse.
Yeah, so Amazon's able to absorb it, and they have a good efficient system, but not everybody has that. So we'll keep an eye on it. But having said that, I think maybe we start looking at volatility and where there may be opportunities. Obviously there's always risk, right? But I think that with the market this high and inflation, and all the things going on, we might see an increase in volatility.
Yeah, actually, before you get started, one piece of information. Jake was asking yesterday at the Interactive Brokers webinar. I was drinking out of a Dunkin' Donuts cup. And for those who don't know, Jake resides in Malaysia. So he was shocked at the size of it. And I have it here so you can maybe see it. That's the actual size of it. It's extra large. So Jake, it's bigger than my head, actually, if you can see it. It's a big cup of coffee that they offer at Dunkin' Donuts here in Pennsylvania. So
yeah, I know when we used to get those, because Will likes the big ones. So I used to get the big ones with Will until I started like developing stomach problems, and I had to downsize.
Yeah.
Huh?
Yeah.
I was like, I don't know. After like about a month, I was like, what's going on here? My stomach feels like I. So, yeah, be careful with them, but it'll definitely wake you up.
All right, let's get started.
Let's get started. So we're on a pre-market report. We have stocks trading in pre-market hours, most actives, biggest percentage gainers, biggest percentage decliners. We see here 56 made the percentage gainers list, 145 on the percentage decliners list. So from that perspective, looks like a weak to negative bias at the open. Let's take a look here at the higher market cap stocks first. So I'm going to use this filter, go to market cap 20 billion or higher. Again, here we see similar situation. 12 made the percentage gainers list, 54 in the percentage decliners list. A couple of them, I noticed the bank stocks have been doing well last couple days. So they've been showing up there, but I don't see anything with very big volume. There's the one on top, up 3.7%, percent, that looks like it reported earnings yesterday after the market closed, so that's reacting to its earnings. Other than that, I see like pretty small volumes in the pre-market hours. Similar situation here to the downside. I think this Roblox, that was up big yesterday, right? Roblox, well,
Yeah.
4%.
For those who don't have a child, they may not know, but it's an interactive game between children, the game, and their friends or friends they create online. It's a community.
So they created like a social element to the game.
It's a big social element.
Right. And I think my son played it because for his birthday, somebody gave him like these cards, and you could use the cards to do something on Roblox, right? So you have to buy them. I don't know what you do, but he was excited about it. He's like, oh, this is what I wanted. Let's take a look. If there are no questions on anything in the pre-market, I'm going to start looking through different reports where we could look through for implied volatility. Any questions, Will?
You can move on.
Okay. So I'm going to go here under options. We have lots of, obviously we're options focused, so we have different types of reports to look at volatility, and we have different screeners to look at volatility from different perspectives. I'll take a look under options. Let's take a look first at the implied vol rankings, and this is basically looking at the 30-day implied volatility in an option at the money. So it's a 30-day constant maturity implied volatility, because remember, implied volatility, it's not something that's observed like a stock, right? Like a stock is a price that somebody traded at. Implied volatility is a derived value from option prices, right? So you're looking at the option prices and saying, based on these option prices, you plug them into a option pricing model and you generate an implied volatility level. Okay, so to do that, and a lot of people I do get this question, well, why is your implied volatility different than this implied volatility or different than my broker's implied volatility? Implied volatility, it's not a formula like A plus B equals C. Okay, it doesn't work that way. It's an algorithm with a methodology. The methodology is what inputs are you putting in? And some of the inputs are going to be assumptions, such as what do you think interest rates will be in 30 days from now, 10 days from now, 40 days from now, a year from now. Others, there's an assumption for a dividend. So if a company didn't announce a dividend, you have to make an assumption. When do you think the next dividend will be and the amount? Also, you're going to make certain in your model, you're going to have to tell the model how you handle certain things. So the model will ask you, well, how many days are there to expiration? So are you using calendar days or trading days? What do you do with holidays? What do you do, throughout the day? Do you decay the day, by hour, linearly, and so forth? So when you look at implied volatility levels, it's a methodology. It's not a formula where everybody's going to get an exact number. Okay, and remember, you're taking a snapshot in time of option prices. Also, weightings come into mind. So you're looking at option prices. How much weight do you give? There are different options around at the money. How much weighting do you give to each one? How do you handle it? How do you handle wide markets? So when you look at the implied volatility levels, okay, and some people will say, well, you have 86.9. I went into my broker and he has 95. What gives? Again, we don't know what they're using. We don't see their methodology. It's all behind, and there's maybe 50 different factors, in there. So we're not going to, but the important thing is that you're keeping your methodology consistent, because you want to use it as a comparison to historicals. So if you're using this methodology and you're comparing it to historicals, you're using the same methodology to know, yes, it increased or decreased or stayed the same. Okay, hopefully that makes sense to people when we talk about implied vols. Okay, so here, huh?
It does.
Okay, and what over here, since we're looking at the 30-day implied volatility, okay, so this is the interpolated 30-day implied volatility based on the option prices. How do we know if it's high or low, right? If it right here, 3D systems, and this one actually, this is a 3D printer. It was up 35%, and they keep coming back. I don't know. Do people know 3D print? I know. I'm sure by now everybody knows 3D.
Well, I know at one time 3D printing was kind of like the EVs or the weed stocks. You know, it had its monster run at one time and excitement, and then kind of dropped off. And it looks like Triple D is the winner here. I mean, the one that survived.
Yesterday. Yeah. Yeah. They keep coming back, faltering, coming back, faltering. Like a lot of people see that it could be useful, but it hasn't yet come into mainstream. I've been reading, I think, you know, certain, just because we're on it, you know, I think banks have started to adapt some of the technology. I think Bank of America said that they might use 3D printing to manufacture, you know, how they have like what debit cards, credit cards, they could use 3D printing. I think.
Oh, I thought you said they were going to print dollars with them.
Oh yeah, yeah. So, well, no, that's the Fed. The Fed is going to definitely use it. Yeah, so the Fed, they're going to be using them over time. So, you know, there's going to be like a lot of trillions of transactions on the but I think also in the health.
That's a joke.
Huh?
That's a joke. Well, the 3D printing part, they have special printers that are made particularly for them with special ink.
Yeah.
not 3D printers.
Yeah. So let's get back to the implied vol. 86.9. How do we know, is this a high volatility or low volatility for this stock, right? Because every stock is going to trade at a different volatility. Stocks are more liquid, some are less liquid, you know, some are moving around more. So how do we know if 86.9 is high or low? Well, we have to compare it kind of first to itself. Where does it usually trade at? So we can compare it to two things. One, where does the stock volatility tend to be? So if the implied vol is at one level, where's the realized volatility? Because implied volatility is just a prediction of what the stock volatility will be going forward. Nobody knows what it's going to be going forward, but we could kind of take a look at what it tended to do historically. So we could compare it to a 20-day vol, historical volatility in 1 year. So this is the actual stock vol. So right now, implied volatility going forward is saying the 86.9. The last 20 days, the stock volatility was 87.6, so very close to that. 1 year average 90.9. Again, that's very close. So it's not a big divergence from the historical vol right now. What about where does the implied volatility tend to trade? Right. So that's the realized volatility of the stock. What about where the options tend to the premium tend to be at? So that we have to look at the historical implied volatility. And to put it in perspective, we're going to look at the last 252 days. And we're going to say, if we use the last 252 days of observations, where does 86.9 fall, right? Is it on the high range or low range? So what we use is a percentile rank here. So percentile rank is going to tell you that how many of the observations in the last 252 days were below the current level, right? So this is telling us 64% of the observations were below 86.9. The rest, obviously 36% were above. Okay, so the higher this number is, the higher the implied volatility is relative to historicals. Okay, so 64% of the last 252 observations were below this level. What about, and this one we added because a lot of people want to see relative to the high-low. So where is it on a percentage basis? If we took the very low of the year and the very high, where does it fall under? So we see here that it's on 29 percentile rank. So why are these two different? It's important to know because some people, you know, I don't even want to name like, you know, the platforms they're using, but they're going to use this 29%. So this 29% seems like a good deal. Why? You know, why is it 29% versus 64%? Well, imagine that you have only two observations, a low and a high, right? And let's say that there's, out of 10 observations, right, 8 of them, let's say, were 80, you know, 80, 80, okay? So out of 10 observations, 8 of them were exactly 80. One of them was maybe like 86, and then one of them was 1,000, right? So because this one outlier is so much higher, this is the position rank, which I'm telling you about 95% of the people out there coming are using. They're using that. They swear by this. But if you have one big outlier, that's what you're looking at, 29%. So even if this was 90, this could be like 11%. So be careful when you're using it. Just keep in mind what you're doing, right? There's a difference, IV percentile rank and then a position rank. Is everybody okay with those definitions?
Yeah.
Okay. So the other thing we have is because, well, we here we show that option volume, and then the open interest percent rank. So the open interest percent rank just allows us to see, well, is there a lot of open interest relative to historicals or not a lot? So 94th percentile rank means that whatever the open interest is right now in 3D systems, 94% of the days in the last 252 days, it was below today's level. So on a relative basis, open interest is elevated, okay? And this is where the last earnings was, just to give a heads up. So here, since we know that, we could start screening. And if we wanted to look at, let's just say, we want to see where the implied vol rank, percentile rank, is in a subdued. So this is 30% or lower. So
Hey, Dean, when you get a chance, Mike is asking about the color coding of the IV rank. If you could go through that as well, just a FYI.
Yeah, so what we did was we kind of, just so they stick out more, what we did was we gave a color of the ones we consider elevated, ones we consider moderate, and ones we consider subdued. So I think the cutoff was 70%, I believe. Once it's above that, we consider that elevated. It's starting to get into the elevated, so we just gave that a color. Then a moderate, so we gave that red. The moderate we gave, which is kind of in between the like 30 and 70%, something. I think that's what we gave it. That will be in the, what is that? Is that orange or yellow? How does that look to you?
It looks yellow to me.
And then
I think yellow would be caution, right? Maybe.
Yeah. Well, yeah, we just gave it. I mean, I don't think we were thinking about it that way. We just had to give it 3 different colors. So we just did it that they contrasted, because sometimes you give 2 colors that look very similar to each other. So you can't say, so we had to try to contrast them. But I don't think we were thinking about like a traffic light type of thing. It was just, let's pick 3 colors to distinguish them. And then we got the subdued, and that's below 30%. Okay, so that's just the way visually to your eye to pick up on, higher and lower in the middle. Does that make, hopefully that. So let's just take a look at subdued. Maybe we could find implied volatilities that are relatively low. And remember, this is a starting point, so you want to see why are they low. They might be low for a reason. I mean, like a stock could, if it gets taken over for cash,
Yeah, well, a new
There's
chameleon D,
possibility.
a new chameleon 4D drover says, does it mean that you should sell an option, elevate and buy an option subdued? And that, to me, that's not necessarily the case. It means you got to do your research, right, and dig deeper
Right.
and see what's going on.
Exactly. So first, you're just trying to look for a potential opportunity, but you should never just take one thing, never research it, and just do it, because that's not smart. That's not trading. You're just starting to compile information. For example, you could have something that has zero volatility, and it could be for a reason. And I was just trying to explain, like, if a stock gets taken over for $100 cash and that's the price, it's going to have zero volatility because it's not going to move anywhere, right? It's getting, maybe it'll move a couple pennies back and forth, but that deserves a zero volatility, irrelevant of what the historical volatility is. Okay. Other times the implied volatility could be higher, and it could be for a very good reason. That doesn't mean you need to sell it. It could be a very good reason, doesn't mean it's a sale. And giving maybe an example, something is going on in the stock that hasn't happened before. Like maybe SEC is investigating, the CEO disappeared with money or something. They can't comply with their financial state, whatever. You have to go and take a look at the story and what is the thesis behind the trade. This only starts filtering out. It could be an opportunity, but you got to do your due diligence. You got to do your homework. There's no number that substitutes for that.
Yeah, and we have a lot of new chameleons on, people who are joining for the first time. Actually, quite a few people who came over because of the webinar yesterday. So just be aware, I put a link, and I'll put it again at the end. There's a Discord group that was created by actually Jake, who's on. Dimitri and I have nothing to do with it other than we sometimes get on. But there's a large group of people who are on there discussing all sorts of investment ideas. Some of it's revolving around the chameleon, some other products, but it's a good place to go and discuss your thesis, right? And other people will talk about it and beat it up, say maybe it's a good idea. But anyways, I put that link out, my email, williammcbride@gmail. Any of you new chameleons who want to join that Discord group, send me an email and I'll send you a link. Sorry, D.
Yeah, no, thank you. And I'm glad. Welcome to everybody who's joining us for the first time. Obviously, we're glad that you came. And yeah, it's important just to, when you look at a number, and there's two numbers here, right? That we try to put as much different information kind of in front of you to help just assess what's going on. You want to go there though and start researching what's the thesis. There could be options that are just already elevated. They had their move and maybe they're on their way down, or something that's gotten really hit, maybe too much, and there might be a catalyst for a move. So you do want to always do your due diligence and research. This is just a screener to narrow down opportunities.
Hey, D, could we take a really quick look at something that's happening with a dividend? I think it's tomorrow in Visa. People were asking about it. If you got a quick chance to look at this.
Okay, so
it's Visa, and there's a dividend tomorrow.
Okay.
It's a May 21 vertical spread. Short the 195s, long the 205s.
Short the 195s. These?
Yeah.
And long the 205s?
Yeah. They're worried about getting assigned. The best.
So if there's a dividend, I don't see one confirmed. I mean, I'm assuming that this was somebody confirmed this. There's a dividend.
Well, they got a note from their broker dealer saying there's.
So here's how I don't see a lot of open interest in these. Usually you'll see trading when there's open interest, but the idea behind the dividend is, if you have a call option, right? You own a call option. Let's just say, I'm going to just go down really deep to make it easier. Let's say this 130 call, right? This option, the 130 call, is almost $100, $95 in the money. It's going to behave exactly right now, like the stock. It's going to move 1-for-1 with the stock. So you're basically, you have a call, but it's already so far deep in the money, it's almost like the stock. The thing is that the dividend, an option holder is not entitled to the dividend, only the stock holder, right? You have to own shares to receive the dividend. Dividend doesn't get paid to an owner of a call, not a regular dividend. So the only way to get that dividend is you have to exercise the call to convert it to the stock before the X date to receive the dividend. Otherwise, you're going to miss out on the dividend. So it's like money you won't get, right? But the option's still going to behave like the stock. You're just going to miss out on the dividend. So you need to exercise it. And sometimes, and if you're shorted, you're probably going to get assigned on it, right? Most likely you are, but not always, because somebody might forget. For you to get assigned on it, the other side has to exercise. Sometimes people will forget to exercise it. And if they do, if you're short that big, deep in the money call, and I'm assuming a lot of people will be long stock against it, maybe you did a buy right, you'll get away with it and you're going to get a free dividend. It's like free money. Most likely you're going to get assigned on it if it's very deep in the money.
Yeah, you should.
Okay.
I mean, if you're worried about getting assigned and having to deliver the dividend, you should roll out of it.
Yeah,
Or
you could try
close,
to
or just close the position out. Yeah.
Yeah, well, make sure if you're closing out the position, you don't want to pay because look how wide these spreads are.
Yeah, no.
So sometimes it's just better to let it, because you don't want to pay $1 over. If the dividend is 30 cents, you don't want to pay $1 over parity to get out of it, because then you're paying more than the dividend is worth. So just when you're doing that, be careful. But yes, if you're shorted and it's deep in the money, most likely you're going to get assigned on it, unless somebody forgets to exercise. But we're at over 9:30, Will. So
yeah, I just appreciate you getting to that, D. Everyone, great job on the chat today. A lot of interest and back and forth. Thanks so much, D. Another great show, buddy.
Yep. Thanks, everyone. Have a great trading day. Hope to see you guys tomorrow.
Stay safe, Chameleon.